Morning and good afternoon. I'm Tim O'Brien, the Hub Manager of the BTech Consortium. We would like to welcome you to a product presentation by Identify Inc., a Delaware corporation based in Tulsa, Oklahoma. Identify provides data engineering, warehousing, and business intelligence tools that help banks unlock and use data held by their core service providers. They partner with Snowflake, which, as you know, is a modern data platform that runs on cloud services like AWS and Azure to offer its secure, flexible way to store, manage, and analyze data. I'll add here that Identify's tools and expertise work across a range of data sources, regardless of what infrastructure banks use. Snowflake, in other words, is not essential to what they do. Leading today's presentation is company founder and president Lee Easton and marketing director Rochelle Rummage. Excuse me, Rochelle, I know you well. My bad. Lee studied electrical and computer engineering and computer engineering at Oklahoma State. And I thought it was interesting that while he was at school, he also founded a robotics club and dabbled in UAV design. Those are current technologies that are of great interest to this country. He parlayed his training as an engineer to launch Identify in 2019. We always save time at the end of these presentations for Q&A, as well as BTech's one question survey that we will post through the Zoom chat feature when we get started. Your quick take feedback on this webinar is confidential and critical to our work. We'll finish no later than 10 minutes to the hour. Links to the demo, recording, and presentation deck will be available on the BTech Hub portal. And for our non-BTech friends, send me an email if you'd like links to the slide presentation and recording. With that, let me give the floor to Lee and Rochelle of Identify Inc. Floor is yours, Lee.
Awesome. Thank you, Tim. Appreciate the warm introduction there. Yeah, for those that are joining, good to connect, good to meet you guys. Like Tim mentioned, questions at the end, but I would encourage you guys take advantage of the chat below. Rochelle's going to help me out and monitor some of the questions that might come in throughout. So if there are things that come up as I'm presenting, I will try to also answer some questions in real time. So I've got a slide up. Hopefully everyone can see this okay. We're calling this presentation today the Data Advantage. And I wanted to kick this off with a bit of bit of an overview on some buzzwords, some common words that I think we're all hearing today, whether we're banks or not, but typical words that we find interesting around data right now, specifically AI or AI agents. There's a lot of data discussion around fraud detection, tokenization, tokenized assets. And these are all ambitious goals, whether you're a bank, credit union, or even maybe an oil and gas company or in healthcare. These are data, but the reality of the world is it takes a lot of work to get that data in the right place so that you can focus on these strategic initiatives as an outcome. And that's really fundamentally what we do. That's the kind of the living, breathing goal and the experience and the background of the team here at Identify is kind of the view here on the other side. The reality is getting this data pieced together, cleaning it, and creating a foundation that you guys can go build on top of. So let me dive in a little bit more. A bit more about us specifically. So, Identify has been around, like Tim mentioned, since 2019. We started this business out in professional services, focused on one big problem at the time, which was visibility and insights into data. We served clients in healthcare, oil and gas, and community banks. Around 2023, we had hit our head on the wall enough times to know that the biggest challenge was in community banking, and the biggest challenge beyond the analytics was actually how we get data into a dashboard. So we started shifting our focus a couple years back. You'll see a note here that says data silos and limited insights. So one of the biggest obstacles that we had over the first few years was just access to data, and it was also fragmented. Every bank we worked with, it seemed like there was 3 to 5 primary systems that they were using, and none of those systems communicated. You'd have a customer record in one system and maybe 5 different versions of that customer record across other systems. So this creates challenges across the board. You've got potentially regulatory and compliance challenges because customer information is very important when you get audits and exams. These are security concerns of knowing who your customer is, KYC. This is a challenge for any small bank or any small organization to innovate because you guys need to be able to bring in new products, better products, become more digital. And if those new products cannot work with these old systems, you're kind of out of luck. So that's a big focus. The nice thing is I do see more trust in the industry. A few years back, cloud alone was a bit misleading. A lot of banks that we were talking to 3, 4, maybe even 5 years ago did not trust their data in the cloud. I think now that we're seeing Fiserv and FIS and Jack Henry make these big cloud initiatives, there is more trust that it's now proven that data can be managed in some sort of cloud infrastructure without any major security concerns. So I want to talk about kind of the future as we see it. Not everybody on this call will agree. This is just our observation on some of the data that we've collected. But we see within the next 3 to 5 years that there's really 3 different paths that banks are going. Option A, we see the banks are kind of sitting back and observing. This is kind of the takeaway I've had from the Acquire or Be Acquired conference the last few years. There's a lot of guys that come to that leadership level and even board level, and most of them are there to observe and see what's going on, or at least hear about what's going on. And that's not a bad thing. The ones that we've typically worked with are option B. These are banks that are already headed down the path of innovation. They've got some sort of strategic initiative or objective, or even a product that they're maybe working on to better serve their customer. And then there's option C, and these are the banks that are going to go through some sort of merge or acquisition over the next 3 to 5 years. So, where I really like to see us help is option A and B. For the ones that are already innovating, they're a great fit for us. Those are typically the ones we've aligned with over the last few years. Now I find us spending more times with the ones that are kind of in the category A that have observed and now have a lot of good questions. So we spend some time doing things like this webinar to try and just promote knowledge and share knowledge within the industry. So here's a quick overview of our solution. Tim mentioned that we're a platform mostly based on Snowflake, but this was kind of a journey for us to get here. So the 3 categories of our expertise fall into the buckets of data architecture, data engineering, and data analytics. And I put these on the screen in a chronological order because it is very important. We actually started the business with analytics and learned really quickly that everything required good, clean data, which is heavily focused on engineering data and transforming data. But you cannot engineer and transform data well until you have a good plan for that data. So our team mainly consists of these 3 types of individuals. We're about 25 people today. We're pretty lean. We've worked with a little over 22 or maybe even 23 banks now, so continuing to grow at a good rate. But the architecture component is very important, and so each block you see here, we've started to productize over the last few years, mainly so we can help more institutions and help them scale. So we do have a standard data architecture. There's about a 80% overlap bank to bank and credit union to credit union that this works. There's no perfect glove, there's no fit. It would take really the whole industry coming together to standardize a data model that works. We talked to MasterCard, we talked to Visa, the payment processors, the issuers. There's a lot there. So we can at least get you to 80%. There's still about 20% of configuring on the architecture to make a good, clean data model. Once you have a good, clean data model, then the engineering piece works seamlessly. So we can ingest as much data as you want to throw at our system. We bring all that data in, it normalizes, it stages. You can start creating all your workflows, your automation, and you can even bring in an API infrastructure or a data share infrastructure to expand your workflows. And then the last piece, it's really analytics, but I think it's more than that these days. It's more, I would call this intelligence than anything, but taking action on that data, moving it into a dashboard or maybe even like a chat type of interface. There's a lot of a buzz around AI and agents these days. So that's kind of the last piece. So our process. So how do we break this down? We've moved through a series of discovery, design, implementation, and then support. Our clientele typically is of a community bank, which everybody knows this, but sub 10 billion. We have a few that I would say are more in the regional size. The ones that are typically larger have some sort of IT team that can support this system. And so we're really spending the kind of the front end here on discovery, design, and implementation. The ones that are maybe smaller, so let's say less than 500 employees or so, um, we might have continued engagements just around supporting, and typically that's supporting the pipeline, supporting the data sources that come into the platform. So this is kind of a breakdown of the process. Now, moving on, we've mentioned Snowflake, I think, a couple times now. So I give you guys the why. I'll start with a disclaimer that it doesn't have to be Snowflake. Snowflake has a great competitor out there called Databricks. It just needs to be one of the two, in our opinion. Um, we've come across banks that have done a decent amount of work leveraging just tools in AWS or just tools in Azure. A few that have gone decently far with just tools in Google. But at the end of the day, these two companies, Snowflake and Databricks, provide a means of orchestrating all those tools into one spot. And that's why we suggest it. It's a simpler model, it's a scalable model. Historically, I think those that have known of Snowflake, it's been known to be expensive. Databricks can be expensive too. I think anything can be expensive if it's not done efficiently. And that's why we're a very strong partner to Snowflake. We do this very efficiently. Our banks are typically spending 10 grand to 25 grand on Snowflake, which is not really a lot of money in the grand scheme of things and the value that you can get from it. And then you can still select AWS or Azure as the primary storage bucket for that environment. So if you have some of this infrastructure already in place, or maybe you're moving from an on-prem or what some people call co-located, where you've got maybe some SQL on-prem and you've got some stuff in Azure DevOps or Azure Blob. Snowflake adapts and sits right on top of that, and then all your pipes and all your cleaning come right into Snowflake. So this is a very generalized, and I would say a very watered down workflow of what an architecture could look like. Not saying this is the solution that fits everybody, but you know, um, for a broad paintbrush, this is what end to end you want to see in your environment. So shall you guys do some sort of implementation yourself? This is really how you want to look at things. You want to have that internal discovery period, kind of step one over here on the left side of your screen, where you guys are cataloging and mapping and prioritizing all the data sources that your environment needs. Step two, really through step five. So kind of picking the underlying cloud storage option and then setting up the staging and the cleaning in Snowflake is a bit more of the design and implementation effort. And then really step six, seven, eight. So getting data out of the system for usefulness is where we excel. It's where we spend a lot of time. And happy to have conversations with folks about this, but oftentimes this is where I think banks tend to need a lot of help, whether they have the technical skill sets or not. So I'll move through this one. I've got a couple slides here where I just wanted to show some data sources we've mapped over time, some experience. We really cut our teeth in payments. So some of the banks we've worked with, small banks and upwards to $80 billion banks, have brought us a lot of different payment processors. So one thing we learned about payment processors is they never deliver good data. They always claim to. They say it's going to be on time. They say it can ship with the same format and the same structure. It never does. And so this is where we've really been able to learn and expand our platform, and ingesting all these various data sources through various forms. I feel like has made us a lot better of a business over the last few years. Um, I will say that a lot of the data that we originally bring in for payments businesses needs to go to some sort of transaction monitoring tool. So we've had a lot of more recent and relevant experience transforming data for some of these tools that you see here. You'll notice a few of these are legacy, have been around a long time. Verifin is probably one of the most common ones, Abrigo Band Plus. Um, Not every bank we work with really loves the tools that they have. And so having a kind of a centralized data system puts you in a position where you can become more nimble. You can land that data and expand and test other tools very easily, and you no longer have a dependency of just bringing data in, passing it directly to that vendor. You now control kind of the data mart, so to speak. So you can select other vendors and run through pilots in 15 days, 30 days without maybe spending any money with them. Here is just a quick look at some of our clients. And you'll notice a lot of these are similar in size, definitely in the sub 10 billion category. And I am going to walk through a couple use cases with you guys. I wanted to show you maybe a couple dashboards, a couple things we're building. We try to, for the sake of this presentation, consolidate down to four main things that a community bank would need to transform data for. I'd say the biggest one right now, it seems to be most common, is a lot of banks are trying to get traction with retention and customer growth. So that fits into the customer 360. And it's really just more about knowing your relationship with a client, whether that's a commercial type of account or a consumer account. Lending, of course, there's always an aspect of reviewing loan balance data and performance data. A lot of banks are looking at a breakdown of their officers, and they can use this data to be collaborative or competitive and set goals for the teams that sell. Um, Deposit fluctuations are big. That's always tough to track down because you're typically trying to look through maybe a few different systems for that. And then another one is banks that get into, niche fintech relationships. There's a lot of data that comes through those that examiners really have trouble reviewing, and so it's important to have a system that can support that. So let me jump out of this view real quick. Let's check out maybe one dashboard first. I'm gonna swap screens. Hopefully you guys can see what I'm showing here. I don't hear anything, so hopefully that's a good sign. All right, so here's a quick view of a customer 360 example. And unfortunately, I cannot show you guys any real life versions of this. It's all sensitive information. But internally, we've built our own bank, basically. We thought it made sense that Identify can act as a bank so that we can kind of test and learn in our own environment. And so that's what we have here. So we've got a lot of fake accounts, we've got some fake information. This would be usually data pulled in from some sort of CRM, and most importantly, the core. So you're going to bring in as much data as you can get. So you can get activity type of data over here on the right. The focus is maybe loans, deposits, or any kind of services. Balances across those services, right? So just an interesting one for banks that have a lot of branches. So let's say I want to select a branch visit just for my focal point. I could select some sort of date range on those branches. And again, this is all for, I don't know if I'm gonna hit this, but the very top left, this is just for one customer. So you could drill into from a, let's say from a consumer account to maybe a business here. So if we have a business name, I'll adjust this. All right, so now I've got a business selected and I can see maybe who owns this, what type of business they are, and then I can analyze their branch visits. I can analyze any kind of customer service tickets they've had, any kind of sales referrals over time. And I can see here specifically that they're just a loan and deposit type of customer and that we've had a slightly small growth in their family mortgage over time. So just some quick looks here. Another thing that I brought up was deposit fluctuation. This one's big, especially when you can kind of look like from a branch view. Um, so in the top right, we have just a few sample branch locations. We have the relationship of the officer and the bank, and then we have the fluctuations. And so what you're seeing here is kind of a day to day, week to week, maybe even a month to month view. And I'll go select another, random business here, and hopefully this can illustrate. Let me find maybe a consumer account. There we go. We've got this guy, Sam. I've selected Sam now. We can see branches where Sam has deposited money. We can see whether that's going inward or outward. So we know deposit inbound, deposit outbound, what that balance change is looking like over time. And then maybe we can even drill into a specific branch and see more of Sam's relationship in that branch. Similar views, we've got consumer lending built out. We can really focus in on an officer. So this is kind of like maybe you've got teams that are focused on different market groups, whatever that might be, or different loan types. This is a great way to kind of analyze your team. And let's see here. If we just want to look at, let's say, our Los Angeles group, um, another view here. Let's go select all again. So here's the entire lending team across Boston, for example. If we just want to see our Boston team, I can select that. I can see what that cost center looks like, what type of loans they're doing, and then across the team down here at the bottom, maybe who's performing the best or has had the best quarter. Um, I'm going to move on just for sake of time. There's a few more samples here. We're happy to share these out after the fact. I think even some are embedded on our website. The one that I'm more excited to show you guys, or let me zoom out of this. Um, this is kind of a new feature, something cool. A lot of people do talk about AI and what you can do. Snowflake has really been a huge advocate of just leveraging all the LLMs that are out there. I think they're up to 20 something now in their Snowflake Intelligence project. Within our platform, we can help banks get to this. So as we map in data and normalize data, this basically rolls out with the Snowflake platform. Um, we took the same data set of our identified bank and have fed in here, synthesized core data, the same data you saw in that deposit portfolio. But I'm going to ask it some questions, and I've got my bank agent here. I'm going to ask it about deposit fluctuation. So we're going to ask it, how's my deposit account portfolio looking? Is it growing? Is it shrinking? And then I'm going to have it plot it over the course of a month. We'll ask it for average balances, each account. And then this is great too, because it is a semantic model. We can ask it to include or remove months with incomplete data. And so this is basically like having a data analyst that can run to your data warehouse real quick and query SQL for you. And as it does its queries, it tells you what it's doing, which I think is kind of nice too. Um, and then it will produce results, and we're hoping to see maybe results that are beyond just text-based answers. And so it told me that it is done thinking, which is kind of nice. Um, Gives me its steps and the calculations here. Let's see. So it needs to modify the approach for monthly balances since the previous query results is an error. Let me try a SQL structure. So it's going to try a different structure. Okay. Let's see if it can maybe plot some examples for us. And so one thing that we're testing right now internally is turning this into an agent. And then we can deploy this agent through something like Microsoft Teams or Slack. And so the goal would be to pull up your Microsoft Teams account and you could name this agent, whatever you want to name them, and then go ask them these same kind of questions and have them produce some results. So it's going to give us the average balance by product, hopefully, what products are growing and shrinking. It's telling us that it's able to do the SQL queries. It even gives us the SQL that it executed. It gives us some of the data we're looking for, but that's not going to really tell me anything specific. So here's what I'm looking for. Okay, so it is able to produce a chart, and it is able to break down the average balance by market segment or type, which is nice. So there's our product. And let's see, I might be able to ask it more questions. For the sake of the time here, let's do maybe one more, and then I'll move on. So this gives me good amounts. What I'd maybe like to see more of is, let's see, we've got dates going back to when does our database start? Early 2022. Cool. So in my question, I'm gonna try to segment just a time frame down to February of 2024, which we know we've got data in there. But we're gonna ask it any instances where the balance decreased significantly from one day to the next. Maybe include the account name or number in those results. Let's look at the details. So it's looking for those balances in February, comparing days with previous days. So it understands my question very well. Now it's probably building the SQL. Let's see, based on previous tool result, I need to get clarification, the significant balance increase. Well, right now, I don't know if I have time to tell it what large or significant is, but you guys get the point, and we are happy to demo this some more. So let me jump back over into my slide deck. And think we're going to wrap up just on the 30-minute mark so you guys can jump into some Q&A. So real quick, just next steps here. Would love to have any kind of just conversation with you guys. I mentioned that some of you guys might already be in your journey with Snowflake or in the journey with bringing data together. So we're always happy just to have a call, chat through that, maybe share experiences. If we need to, we can bring in some architects and have more technical discussions. And then next step for us, if you're ready to take the next step, is to start scoping a proposal. So here's my contact information here. And yeah, let's hit some questions if we have some questions.
Thanks, Lee. And also, we're going to post a survey. If you could just give us your quick thoughts on the chat function, just a quick click through, that'd be really helpful for us. We'd appreciate it. There it is. And there are a few questions in the can, Lee, right there. One is if you could just run down those and read those questions and then answer them, that'd be great.
Yeah, so the first one from Andrew, he asked if Snowflake, the 10 to 25 grand figure is for annual cost. The short answer is yes. Yeah, we're seeing, I'd say, an average of the first year being probably 15 grand. We're typically seeing 3 to 4 data sources coming into Snowflake for kind of that price range that I mentioned. If you start expanding, let's say 10 data sources, and we're talking, I don't know how many accounts some of you guys have, but let's say you've got over 100,000 accounts, 10 data sources, you're definitely going to be spending a bit more with Snowflake. That's probably upward to 50 to 100 grand a year. But hopefully that gives some size ideas there. Next question from Michael. Michael asked if we can mix in public data from other sources to get 360. Yes. In the example of Tanner Brown, could you include that public data activity log? Yeah, we can certainly bring in any data source, public or non-public. You can bring in data from Experian, you can bring in any kind of credit and risk data, third-party data. We have banks that get some of this data sent to them in PDFs, and we can ingest that and parse that right into the environment as well. So, getting external data sources, especially public data, is sometimes easier than getting core data. Core data is typically the biggest lift. So hopefully that answers questions. On like sites visited, ads clicked, etc., a lot of that would be like marketing data. So depending on what kind of maybe sales tool or CRM or website that you guys have, it's just a matter of is it an API or is it an extract or does it integrate directly? So that's what we look for. Um, Andrew had another one. How is householding incorporated in the platform? That's a good question. We're still working through some of this. We know that the Customer 360 is the start to householding. We'd like to expand more on this. We understand that some of that data, kind of bank by bank, we're learning that customer clustering is a little bit different. Some banks like to cluster based on net worth. Some like to cluster based on demographics. So the householding incorporation is very dependent on bank to bank right now. So we're working on that. Um, Another question from Ryan. Are you storing all the data for customers or really just helping to set up the architecture? The answer is both, and we really try to meet our client where they're at and where their needs are. Um, Storage is the cheapest and the easiest part of this whole thing. So um, I mentioned the cost of Snowflake per year. That's typically covering the cost of your compute. The cost of storage is maybe $100 to $500 a year. So the storing of data is the easiest and the simplest part. The architecture and the engineering is really that's the secret sauce. That's the valuable stuff. All right. Another question from Ryan, also a good question on Customer 360. He asked if your Customer 360 view is a true Customer 360, meaning you are looking at all account owner and not just primary account holders. Example, will the models show both husband and wife? I love this question because this is the stuff that excites us. Um, I think this is a phased approach, and not every bank is fully capable of doing what I would consider end-to-end 360. To your point, Ryan, I think that as there's a lot of debate around open banking and open finance. If we can help banks get in a better position and more equipped to leverage some of those tools, and even Plaid and MX and other technologies where you can offer personal finance management applications, and then that promotes your customer to maybe hook in other accounts or other cards that they have outside of their bank. Yeah, that's the goal. It's really that's kind of a strategic effort that we will support, but we ultimately need the culture of the bank to be focused on expanding that relationship beyond just the account holder. And I agree. I think the family data is just as valuable. A lot of this data can be obtained if you have good digital banking products that are, sticky and do what they say they're going to do for money movement and whatever. If you have good products, people will use those digital products, and that's your best way to get more customer 360 data. All right, I love this. We got lots of good questions. Andrew, how much of the analytics are out of the box as opposed to custom built based on the bank's needs? So I'll address that one first. I would say 30% of them are out of the box because we have a template workbook of about 20 to 25 dashboards. The reason we have those is more to provoke thoughts and start conversations. And we almost always find that there are minor tweaks or changes the bank wants. That is hard for us as a business to scale if we're kind of custom fitting things, but um, we learn each time we do that, and it helps us better understand your business. So um, I would say we provide the foundational framework. We iterate based on feedback. So, second part to your question, do the analytics platform allow self-service so banks can build their own dashboards? Absolutely, yes. That's where we want to be. That is where we scale. Is if we can provide good, clean, quality data and a means of querying it, then you guys can go grow your own dashboards. That's kind of our goal. Um, Carl, do you measure the profitability of the relationship? Sorry if I missed that. So yes, we need probably 4 or 5 good data sources to start measuring profitability. If you've got a client that literally just has an account for deposits, pretty easy to measure. But if they've got a loan and a deposit, a savings, and a card, right? Now we're talking potentially a couple data sources. Um, and anytime you enter the world of card, then you've got debit or credit, right? And then you've got interchange. So there are a lot of factors that go into that. We we definitely try to come out the gate with some profitability reports, but there's a lot of massaging on that data to get to true profitability if they have 5 or 6 products with you guys.
Do
So
any of your bank clients use the platform and have dashboards that incorporate data from treasury and cash management that are really commercial facing? And, how does that work if you do?
we, yeah, so sometimes treasury data we can get through core. It all depends, right? I think all the big cores have at least one product like that. But But to get some of that treasury management data, it's usually another system, and then we will design or have designed a separate dashboard to focus on just treasury management. And loan origination is another one too.
And then I noticed I missed Jack Henry. I saw FIS and Fiserv on there. Do you guys have banks that are Jack Henry banks as well?
We do. We
Okay.
do. Our local market, for whatever reason here in Tulsa, Oklahoma, a lot of our banks here are Jack Henry banks.
So it's a no-brainer for you.
Yeah, so a lot of Silver Lake in 2020, um, a lot of Simtar for the credit unions. But it also it's kind of weird. A lot of core conversions seem to be happening right now. So I've got clients going to Fiserv from Jack Henry. I've got clients going from Jack Henry to Finxact. Um, so we're kind of getting I would say there's no concentration of any of them right now. They're all a mix. But we've even got some that are DCI, that are IBT, that are CSI as well. So some of the smaller core providers are coming up a lot more too.
Do you find can you characterize, you know, the contribution, that comes from the data service providers, being easier for you guys to work with or more difficult? Can does it really depend or not so much? Does that make sense?
It does. I think I hope I'll answer this correctly if I understand your question, but are you saying like a core
Are
provider?
like,
So
are there
that
some you like working with better and, can be more effective and helpful to your banks, given what they want, the value proposition for them, some core service providers that provide ease of access and, facilitate what you're trying to do more effectively than others?
there's some, I don't know. I try to stay optimistic in their goals and their mission of the core providers and the bigger companies. But to me, that they're all just sales and distribution companies. You know, they buy businesses, they try to then, you know, implement those businesses as new products when they buy them, and then that just adds to the complexity. And when they buy a company, they never fully seem to integrate it. The only one that I would say is tracked decently well is when Jack Henry acquired Banno. It seems like those they operated them somewhat independently for a while, and now they are truly integrated. But um, we anytime we hear news about a core provider saying that they're going to innovate or open more access to data, it typically means there's a big price tag associated with it for the customer.
And then sticking with the core service providers, talking about their initiatives, cloud related initiatives, I'm sure you monitor that. And do you anticipate, will that have bearing on your business in some way, shape, or form going forward once they're implemented? And can you just talk a little bit about what each of these guys is doing to the big guys on that front?
Yeah. I'll share what I know, and it's just my perspective. This is not, market or legal advice, but um, Fiserv, we tend to get a lot of business through Fiserv right now. They've been the most public, whether you want to check their blog or their LinkedIn. You can look at Mark Ryan's LinkedIn. He's their CTO. They're very public in what they're doing with Snowflake. Their Clover business specifically is what led that Snowflake initiative. And then I think they saw an opportunity that if they replaced, um, you know, some of the old AS400 architecture infrastructure with Snowflake, they would be moving in the right direction, which they announced this in 2022. Here we are, 2025. It's almost the same month. I think they announced in October 2022. And they're still struggling to try and roll this out. They've tried to wrap it as a product too many times. They're trying to charge for it right now. They're getting some traction and adoption. I think that a company that size pioneering something like this is it's a good sign, um, but we're aligned to try and help because they have a lot of banks that have moved to Snowflake, knowing that they could potentially access all their core data now through a Snowflake connection. FIS is doing the same thing. I think for me, this is just my own sense on it is that it's an obvious sign that they're doing some consolidation. If you are locally hosted with any of your core providers, they've either already reached out to you or they will reach out to you probably within the next 12 months to notify you that they're going to sunset support for those on-prem or locally hosted cores, because I think they are slowly trying to move everything to cloud, which would be either Snowflake or Google at this point.
Is there as far as ongoing service that you guys provide once you build or you implement the platform and clean the data and do those things, and the bank is using this on an ongoing basis, is there any need for like real-time responsiveness? What is your staff? What are you dedicated to providing banks on that front? And is there a need for very, very rapid response in any way, shape, or form for the work they're doing and while using your product?
We have not gone down the path of becoming an MSP or like a tech support type team yet. Um, most of the time, this is such a strategic initiative, kind of an operating efficiency type initiative that, um,
That there's time.
yeah, exactly. Like the operation workflows that we're potentially replacing free their folks up, and that's kind of our goal is to help them, not reduce headcount, but mitigate hiring going forward. And if we can provide a system that is self-serving of the data that they need, then yeah, and then the operational downtime stuff, so like SLAs and support, um, we just have not had, yeah, until there's demand for it, I don't think we need to address it. There has not been any demand for that.
Looks like there's a couple more questions that just came in.
Yeah, Ryan just asked, are you currently analyzing and providing insights from transactional level data?
Good
Do you want to answer
question, Ryan.
that?
Yes, we love transaction level data. Um, We we have been focused on transactional level data for a while, because some of the early clients we served were large in card issuing and payments. Um, we built a lot of dashboards around like card activity, merchant activity, peer-to-peer activity. Um, that's that type of stuff. There's so much behavioral insights you can gain from that data. Where there and there's companies out there that can even help, you know, you feed them that data essentially through an API or something like a Revio, or there's a company called Segment. There's a few others out there. Yeah, if you have a good infrastructure with quality transaction data, there are tons of tools out there that you can now take advantage of, feed that transactional data into, and get back all the insights you need on those customers, which is kind of cool. Um, and even the stuff that I was kind of demoing on Snowflake Intelligence, it's getting there. Like this stuff is relatively new, but it's getting to the point where you can even ask questions about customer groups and their transactions.
And then Andrew has some great questions. Shout out to Andrew. But can you talk more about common operational efficiency use cases?
Yeah. Um, Ops is a big one because there's a lot of workflows in banks. There's tons and tons and tons of workflows in every department. And so when we engage with a bank, we try to capture as much of that as we can. Each bank is staffed slightly differently, and I'll use reconciliation as an example. You know, reconciliation can typically be one headcount in a smaller bank. Maybe it's two as the bank gets bigger, but it typically when we step in, there's a very manual, tedious process of pulling multiple files together, checking balances, or maybe you're having to, ingest Nacha data and do a balance against a network file or something like that. That's just one example of what we typically see done in a spreadsheet. And then sometimes there's a lot of technical debt because this person has been there for a long time and they've done this process and they kind of own the process. But if that person ever leaves, or heaven forbid, they're on a 3-week vacation, whatever it might be, typically puts the bank in a tough spot if that has not been automated. So we try to peel back all the layers of manual workflows first, and make sure that you guys are staying focused on automating those workflows.
And to add on to that, I will also mention that there is some pricing data that identifies providing in the slide deck. And that's, to me reflects transparency of the company, which is a real positive. So you can find it there, and that should be useful to you guys in terms of doing your evaluation. And I will also say Lee is going to be at our conference in um, just over 2 weeks, which is in Santa Monica. Anybody on this call is welcome to join us there as our guest. If you happen to be in the area, drop by. It's a small conference, pretty intimate. There will be founders from several other tech companies, and you can talk to Lee there. So give me a holler if that's something that would be of interest to you. Lee, closing remarks.
Um, no, I hope this was helpful. We try to cover kind of a general overview today. So a lot of good questions. We're happy to send this slide deck out. I think we just got a question about getting a copy of the presentation. So we'll package that to you, Tim, and then if you want to distribute, feel free. And then yeah, we'll look forward to connecting with some of these guys in person in a couple weeks.
Hey, Lee, one other question. What part of Oklahoma is that background from that you're calling in from? Is that by OKC? I think I've seen some.
Yeah, this is the flat state of Oklahoma. Now, this is one of my favorite places is Telluride, Colorado. Spend every August there. Just got back last week.
Stone's throw away. Well, this was great. Thank you so much for taking the time today to present. I'm sure you'll have some follow-up, and we'll circle back and we'll see you in 2 weeks. And y'all have a great rest of your week.
Thank you. Thank you, guys.